So I'm just going to record it so that I can just go ahead and post it on the YouTube channel so that everyone can watch it later. Okay. At the moment we are about 10 people. So I just request you guys to mute from your end if you don't want noise. All right, sir, we are live right now. Okay, so we're going to talk about Fibonacci ratios, and how to draw them, and how to use them as support and resistances, and how important when we reach to certain level or certain ratios on the chart, and how to understand the market. Okay, so first of all, I'm going to use two platforms. So one is the standard one which we have here right now, MT4 MetaTrader. Okay, also we're going to use the web platform from the FXCM. Okay, the FXCM platforms are how, because a lot of people trade on FXCM platform as well. So what we're going to do, we're going to use both of them to understand and draw the Fibonacci levels. Okay, so the first thing, when it comes to Fibonacci's, okay, so there are indicators in the market wherein you can just apply them using custom indicators, and it's available on every platform. Okay, you don't have to download, or you don't have to source it somewhere else to draw the Fibonacci ratios. So it's available in the Fibonacci's. So I don't use much of this FXCM platform. I only use Fibonacci on the MT4 MetaTrader platform, wherein I've been trading from many years using this platform. Okay, so let's talk about the Fibonacci's. Okay, first of all, if you want to draw Fibonacci, you can just click on this option here, where you can see here Fibonacci retracement option, and if you just draw it, just draw this line like this. Okay, so you can see the Fibonacci starts from 0, 23.6, 38.2, 61.8, and there is another one called 50% Fibonacci. I'm not using it. Okay, I'm gonna explain you like why I don't use 50% Fibonacci, and there is 100%. And if you go above that, it's 1.38 ratios, 161.8 ratio. It will goes like this, from below 0 and above 0. So whenever you want to use the Fibonacci's, the first thing you have to do is you have to look at the impulsive wave. The impulsive wave means the longer wave on the chart. Okay, so make sure you always minimize the chart as possible. Okay, so here I'm going to look for the Fibonacci, the impulsive wave. Here I have one impulsive wave. Okay, impulsive wave means the long wave. Okay, something that is trending for a while. So here I have another impulsive wave. This is impulsive wave 1, and this is 2. Okay, and now here if I look at this corrective wave, this is called the retracement wave. Okay, so just make sure you understand what are the impulsive and the corrective waves. Here I have another wave. Okay, kind of retracement. These are the retracement waves. So this is the main Fibonacci impulsive wave at the moment on the current live market. Okay, so once you identified the zone, okay, once you identified the impulsive wave, so all you have to do is you have to just look at the wave and understand this is where the market is trending downwards, right? The market is trending downwards, right? Market is coming from the top to the bottom, right? I'm just gonna mute a couple of people because I can hear a lot of noise in the background. Okay. right? So this is the impulsive wave. Okay, the market is coming from this zone to this zone. Okay, so it's a downward trend, right? So what I'm going to do is here, I'm going to draw the Fibonacci from the top to the bottom. Okay, I'm gonna just delete it, and once again I'm gonna just draw it for you guys so that you guys can understand. Okay, this one starts from here and ends here. Okay, you can draw it here also, but if you look at the market today, so this is the level where the market is trending at the moment. Okay, so I'm gonna maximize the Fibonacci right now. If you maximize the Fibonacci's, so you can see the levels there. Okay, you can see 100%, 0%. You know, this is the lowest low wherein the market has bounced. I mean, the market is taking a support, and this is the 23.6 where the market is respecting that zone. I mean, bouncing back from the zone, and here we have 30%. 38.2, sorry, 61.8 and 100%, right? So how did we get it? We draw the Fibonacci from the top, the highest high, to the lowest low. Okay, this is the high and this is the low. Okay, I mean, this is the 1 hour chart. Okay, you can draw Fibonacci on any time frame. Okay, any time frame. If you go for 1 minute chart, you will see the chart pattern there, and you can draw Fibonacci on the 1 minute chart as well. If you want to scalp, or if you want to trade for like 5 to 10 pips, 20 pips, you can use that as well. So here, if I see this is the high, the market trading, and this is the lowest low, right? So this is the 1 minute chart, guys. So how are we gonna draw the Fibonacci here? Once again, since it's trending downwards, I'm gonna take the Fibonacci and draw it from the top to the bottom. Okay, so this is how you draw. Okay, so you always have to choose the impulsive wave, the long waves. Wherever you see the long waves, so you have to use that to draw the Fibonacci's. Okay, let's go to 5 minute chart. Okay, I have 5 minute chart now, so I can see the impulsive wave here to here, right? This is the impulsive wave, this is the low, and this is the high. And there are market retracement and the corrections. Then again, I have another impulsive wave here, another impulsive wave here, and another impulsive wave here. Okay, so these are the impulsive waves, the long waves. Okay, they're not smaller. Okay, when the market is trending, it will make impulsive wave, corrective waves, and it will trend like this way. Okay, so always understand which are the long waves. You can see them, right? You can see them with a bare eye. I mean, you don't have to use any other indicator or software to understand the impulsive wave. You can just look at them and you can see the long waves. The market has bounced, the market has taken a support, or market trending like 2 to 3 hours straight, okay, or a whole day or straight, okay. So this is how we can understand the Fibonacci ratios. Okay, let's go back to 1 hour chart. Okay, so now we know how to draw the Fibonacci's, right? So now we know in order to draw the Fibonacci's, so I just request you guys to mute from your end, so that people do not hear your noise. I'm trying to unmute your people. Yeah. So just do that, guys. I mean, we don't want noise coming. So many people won't be comfortable with the noise. Maybe they'll miss on something. So I'm muting from my end. Okay, so now we are good. Make sure you don't unmute from your end. Okay, if you have any questions, use the chat so that I can read and I can explain if you have any questions. So we are good now. Okay, so now we know how to draw the Fibonacci. So let's take another chart. Okay, let's take another example. Okay, let's take Euro US dollars. Okay, let's take US dollar versus yen. Okay, so first we need to understand how to draw Fibonacci's, and then we're gonna take a trade using the Fibonacci's, and now we can look at the market reactions to the particular levels. So here we go. Once again, we have US dollar versus yen 1 hour chart. So I want to draw Fibonacci. So first of all, first thing I gotta see is I gotta see the impulsive wave. Okay, I have one impulsive wave from here. Okay, and I can consider this one as another impulsive wave as well. Okay, so this is the long wave. This is the long wave, right? So let me just draw Fibonacci. This is the current market, guys. So if I draw the Fibonacci from the bottom to the top, I'm drawing this from the bottom to the top just because the market is trending from the bottom to the top, right? It's going from here to here. Okay, that's why the beginning point would be 100% level. And here, if I draw the Fibonacci to this impulsive wave, I'll be drawing the Fibonacci from the top to the bottom here, right? So this is how you should draw the Fibonacci's. And if you want to make 50 pips, 100 pips, use 1 hour chart and understand the Fibonacci ratios. Okay, so this is the pound versus US dollars. Okay, so now you can see I only have 0% ratios, and I have 23.6, and I have 138.2, 61.8. Okay, I do not have 50 because I don't use 50, and I don't have 76 ratio. Okay, I only have these four because you have many Fibonacci ratios. I mean, from 0 to 100. But here, in order to trade effectively, what matters to me is the 61.8, 38.2, and the 23.6. Okay, these three Fibonacci ratios are very important. Okay, for an example, the market trended downwards here. Okay, and took a support. Okay, we didn't have Fibonacci when the market was trending here. We didn't know we're gonna have the bounce from this zone. Okay, so it was not 0.0 when the market was here, right? So once the market trended here, so then we know. Okay, so then we consider, because market took a halt and trended from this zone. Okay, so if you look at the market here right now, it's on the 30 to 23.6. It is rejecting the price. Okay, it is bouncing from this. This is the first time it tried. Okay, and the market went down and tried once again. The market is trending at this zone right now. Okay, so this is where right now we can say it's undecided. Okay, the market trend is undecided because still a downtrend, and it is reacting to the 23.6. Okay, so another major resistance would be 38.2, and the support zone is here on the 0.0. Okay, this is where we look at the support and resistances when it comes to the market, when it comes to the Fibonacci ratios, right? Okay, hope you got this. I'll ask me a question about, what you haven't understand. We just learned about how to draw Fibonacci's. If someone is drawing this chart on the screen, I'm sorry. I mean, I don't understand why you guys drawing that. How can you guys get the access on my screen to draw it? I'm not sure about it. Anna, who is that? Please don't do that, guys. Okay, guys, ask me a question about what we learned right now. I mean, how to draw Fibonacci's. If you have any questions about drawing the Fibonacci's on any time frame, any chart.
So from the 0 to the 23.6, when do you know that's going to spike up to the 38.2 ratio?
On the pound versus US dollars?
Yeah, like when will you know that it'll stop consolidating in that area, in those ratios?
Okay, so when it will go up, right? I mean, you want to know like when we're going to understand it has broken and it will start trending, right? Upwards.
Exactly.
Okay, so that's where we're gonna have to have a little bit of patience, because the market has tested once. Okay, this is this potential support zone for us. Okay, so this is here. The market hasn't tested this zone yet. Okay, so what's going to happen is, this is where we understand double tops and double bottoms. Okay, if market reaches this zone and consolidate, or maybe break below but close the price above it and started trending downwards and testing again. Okay, so here we know we have a support right now. I mean, we have double bottom here, right? So when the market breaks it, so whenever the market breaks the 23.6, see, 23.6 is not very, very strong. I mean, you can say it's a mid strong, like a flat strong, but it's not strong, that strong if it won't break. Okay, so market will break and try the 38.2. Okay, so it will try the 38.2, but here where we can consider it as a strong zone. Okay, so most of the time whenever the price reaches to 38.2, it will rebound. Okay, it will pull back. Okay, and it will test to 23.6 once again. Okay, unless until we have a good news for pound. Okay, so market will try up to 61.8. Okay, but whenever the price reaches to this zone, 38.2 and 61.8, it will definitely do a retracement. Okay, it will definitely do a retracement. Here you can see it tested once. Okay, if you look at from here, and it is still consolidating in the middle. Okay, it's not going to support yet. It's not at the resistance yet. Okay, so that's why we have to look for the consolidation. But looking at the chart right now, okay, looking at the chart on the pound versus US dollars, the buyers are coming in. Okay, because it's consolidating in a cup shape. Okay, it's a cup shape and it is ranging. Okay, it's ranging between 23.6 and 0.0, the support, right? So if the market wanted to continue after this rally, I mean this sell rally, you should have just tested the 23.6 or 38.2 and should have fallen. And if you wanted to consider, it is going to go down more. Okay, at the moment it is making some bullish reversal. Okay, it's making some pattern that we can see there is a support, there is a buyers, because the second sell-off will be taking place on the 61.8, okay, or on the 38.2. Okay, so the big sellers are still waiting the price to come to this zone to sell once again. Okay, so here it's kind of not. It is here we are retail traders. You know, there are many small trader, daily trader are playing with the trade. I mean, playing with the chart at the moment. I mean, trading at the moment. If you want to go with the big sellers, you know, the price has to reach to 61.8 or to 38.2. These are the zones where the strong sellers will come in. If this one is the big support, I mean the strong support, the price will definitely bounce back from here, and we can consider a pound versus the US dollars as a a long for a while. Okay, so let's look at another chart. Let's look at some other charts where like we can understand it better. So let's go to USD CAD. Okay. Okay, we have USD CAD chart right now. And you can see the market is trending upward at the moment. And first thing we got to do is to identify the impulsive wave to draw the Fibonacci. We have one impulsive wave here, a second impulsive wave here. Impulsive wave is nothing but the long waves, guys, okay? If you have a hard time understanding what is impulsive wave, just understand that the impulsive wave is nothing but something that trending this moment for a long, the long wave. Okay, so let's draw the impulsive wave. Just identify the impulsive wave before we take a trade. So this is the first impulsive wave, and this is the second impulsive wave, 2, and this is the third, and this is the fourth. Okay, so we have to understand the Fibonacci impulsive wave in order to draw the Fibonacci ratios. Okay, so I'm on the first impulsive wave right now. So let's draw the Fibonacci ratios. Since it's trending downwards from the top, I'm going to draw the Fibonacci from the top to the bottom. And let's go in and look at the market, how the market is reacting at this zone. Okay, this is the impulsive wave, all right? So if you just look at the impulsive wave right now, just go and this is the past. Okay, this is market has already reacted on this zone. Okay, market is already trending after this zone. Okay, but let's go and look at the market reactions here. Okay, the market trended from here to here, and if you can just look at this zone, the market didn't didn't consolidate for a long. It just broke with after 2 or 3 candles. So when we have 38.2, the 38.2 also acted a little bit of a resistance right there, right? Here, okay, it's broke above the 38.2 and took a support on this zone. If you look at there, okay, and then comes to 61.8. Okay, so 61.888 is something that's one of the strong Fibonacci ratios. If you look at here, guys, who is doing that? This is not good, guys. If I find out if the one who is doing this on my screen, and I go, guys, please take it off, okay? This is not professional, guys. Come on, guys, you can't do that. You can't do that. Come on. We are learning here. We are trying to learn something, right? If you do that, I mean, it's not going to stop me doing this. Okay, this is something that you are not, it will show me like you're not, serious about the forex. You're just trying to spoil somebody else's business here. That's what you're trying to do. Okay, seriously, this is not the right way, guys. I'm recording it, okay? I'm trying to help people, right? Okay. All right, so if you look at here, the market right now, it took a support on 38.2. Okay, it's broke below, it's broke above these zones, okay, after taking a strong support here. Okay, so but it retraced once it tried the 38 to 23.6 and broke above 38.2 and went to 61.8. And here the 61.8, where you see the market had a strong resistance. Okay, so if you want to understand more about 61.8, if you look at the market, it was trending downwards. Okay, there are sellers. Okay, these are the strong sellers here. They're selling from top to the bottom here, right? So they took a profit here. They closed their trades somewhere here, and the buyers came in. The buyer came in. The buyer came in. Okay, the buyer took the price from this to this zone. So once the price reached to 61.8, you can see the sellers came in once again and sell the USD CAD. And you can see the market trended downwards after testing this zone. Okay? So that's what I was talking about. A lot of people take 61.8 as strong support and the strong resistance zone. Okay, this is where the big bankers, the commercial people comes in. Okay, so once it reached to 61.8, the market went to this zone. Okay, but since we still have the support zone here, okay, the market again after the retracement, the market went and broke above 61.8 and trended upward. Okay, so here once again you can see there was a strong resistance of the 100%, and the market reacted to that zone. Okay, and again it started a downtrend. Okay, so if you can see 61.8, 38.2 do react when the market is trending. If you draw impulsive wave, you can always take a profit on this zone and always get an entry on this zone. Okay, let's go and draw the Fibonacci on the another impulsive wave. This is the past. Okay, if you look at the past, you will understand what is happening right there. Okay, let's take a Fibonacci ratios and draw from the top or from the bottom to the top. Okay, so this is my impulsive wave at the moment. I'm going to take this one as an impulsive wave. Okay, so the market is trending from the bottom to the top. Okay, so this is the buy rally, the bullish rally. Okay, all right, so as you can see, after this resistance, the market took a sell-off and retraced to 23.6, and the 23.6 once again acted as a resistance, and the market fell. The market went down to 38.2 and took a bounce again, and another sell rally. Okay, see, not every time you can consider as 38.2, 23.6 as strong support and resistance, because the market always breaks support and resistances. Okay, so what comes to play here is, if you look at the pattern, the big structure here, we have one shoulder here, this is the head, and this is the second shoulder. You can see there is a pattern called head and shoulder pattern. Okay, so head and shoulder pattern was created. So head and shoulder pattern, when the head and shoulder pattern created, it means the market going to fall after breaking this 38.2. So market broke 38.2 and trended downwards. You know what I'm saying? If you have any questions, just ask me, guys. Okay, I can. I want to make it as interactive session. Okay, so that nobody misses anything. Okay, I cannot, upload this recording because someone just messed with the recording.
So I have a question again. So this is good for like seeing the history of charts, but what about like predicting what's about to come? Like is there levels that you're looking at and then you understand what's about to come, kind of?
Okay, see here. What I'm trying to show you is I'm trying to show how the Fibonacci works. Okay, but you cannot just use Fibonacci's ratios and trade the market every day. Okay, you have to have your fundamentals in hand. You have to have your other technical indicators in hand. You have to have other sentiments, and there are certain news may be coming on that particular day. Okay, so maybe you have to wait for certain news to get over. Okay, because that's where you get all the informations and apply. Okay, this is just a basic training I'm giving with the basic knowledge how the Fibonacci works and how we should understand the Fibonacci's. Okay, a lot of people use 50% Fibonacci. Okay, some Fibonacci levels, the ratios, that those are not so important. Okay, I'm just trying to say, show you guys that which are those ratios are more important, and and how you use them on a day trading and how you use them on a daily chart analysis. So that's what I'm trying to show. Okay, so we can take another webinars in the future of understanding the patterns, understanding the market. We can take it one by one. But today we're just gonna finish with the Fibonacci ratios and how does it work on the market. Okay, so once again, once the 30 it broke the 22.6 straight away, support on 38.2, and as you guys know, your support becomes your resistance. Okay, it was a support here. Okay, it broke below that and tested it, and it becomes your resistance. The market fell straight away. And if you look at this zone here on the 61.8, and the market consolidated, it took some buyers right here, and the market started falling afterwards after breaking this 61.8. Okay, so these are the zone you should consider. Okay, suppose me as a trader. Okay, if I was taking this sell trade on this pair USD CAD, I would have taken the trade somewhere down here on the 23.6. Okay, because market was trending upward. Okay, and it had a resistance right here. Okay, how do you understand this is one of the resistance? Look at the past, look at the left. You can see there is a zone, right? So there is a strong resistance right there at this level. Okay, if you take a bigger look at the market, okay, this is the resistance. So market, as soon as the market reached to this level, and it attracted the sellers. So once the sellers came in, they started selling USD CAD. And when would I enter the market? Okay, I know the sellers came in and there's a strong sell at this zone. Okay, I draw the Fibonacci ratios on the impulsive wave, and I saw the 23.6 was not respected and broke strongly, and it came in here 38.2, broke, consolidated for a while, and it retraced, right? It retraced to this zone, and once it hit the 23.6, and I had a chance to enter my trade. If I enter a sell order here, okay, my stop loss should be above this zone. Okay, because market sometime may test and make a double bottom here. Okay, my stop loss should be above 10 to 25 pips, somewhere here. But what I do most of the time, when I see this consolidation, the rejection, I set my stop loss somewhere here, so that I can have so that people can take a small risk and take a big risk rewards. Okay, so that's why I always ask you guys to adjust your SL when the market's reaching. Okay, but you can see the clear head and shoulder pattern here. Okay, this is clear head and shoulder pattern. So there is a strong reason you should take a trade on this pattern as well. Okay, this is the head and shoulder pattern. Okay, this is your neckline. 38.2 acted as a neckline. Once it's broke and the market continue falling. But if I take a trade, a sell trade here, my stop loss, my take profit should be on the 61.8. Okay, even if I keep the stop loss here or here, it doesn't matter. But if I want to take a profit, I should take it on the 61.8 because market sometimes may bounce from this zone. Okay, so what you guys do is, if you want to trade swing trading, you take a. Guys, who is that? Once again, guys, this is not good, guys. Why are you even trying to do that? I mean, is that making you happy? We are like almost 20, 25 people here. Is that making you happy doing that, guy? Why are you trying to do that? I don't understand, guys. Okay, anyway, let's move on. All right, so we had a good reason to sell here. We took a profit somewhere here, right? So yeah, that's what it is, okay? So now, let's go and take another impulsive wave, okay? So this becomes another impulsive wave to take a trade on this. So I'm gonna just delete this impulsive wave. I'm just showing you the past, the impulsive waves, that how the market reacted on those impulsive waves. So this is the past. We are not in the present at the moment, okay? So now this becomes an impulsive wave for me, okay? The long wave, right? So this is where we are coming to our present right now, okay? And where the market is at the moment, right? Okay, good. So if you look at the market right here now, this is the impulsive wave. I've drawn the Fibonacci from the top to the bottom because this is the downtrend, okay? So if you look at the market here, once again, I told you 23.6 is not considered as a major or a strong support or resistance. It can be broken easily. But when the 23.6 is broken strongly, that means the market buyers are stronger than the sellers, okay? So if you look at this zone here, 38.2 did hold the price, okay? 38.2 did hold the price here, okay? It touched after breaking the 22.6, it touched the 38.2 and had a sell-off and consolidated and broke strongly. Once again, the market was about to reach the 61.8 here, 61.8 Fibonacci ratio here. So they had a sell-off again. But 23.6 was a major support, okay? The major support. The buyers are stronger than the sellers here. So market continued their rally, okay? On the second testing of the 61 point, also they consolidated, okay? Whenever you want to know the market is going to break this zone, I mean, okay, so everybody says the 61.8 is a strong zone. Is the market is going to break this? Okay, whenever the price reaches to these zones, like a 61.8 or 38.2, look for the consolidation. So market will consolidate slowly with the slow volume, okay? Because maybe the sellers are not stronger there, okay? The buyers are in control. So it will consolidate, and will break with a big candle, okay? That's where you identify the buyers or the sellers are stronger on those zones, and the strong support or the resistance is broken. You can see there's a big candle form. Okay, maybe it was because of news, or maybe it was because of some other bad news for the CAD, or maybe it was because of the consolidation and the market was getting a lot of buyers at this zone. Okay, but however, the market broke stronger, and that the resistance become your support. Okay, you can see the market took off from the 61.8 and it's still trending, right? Still trending, and it did broke the previous resistance, but it's testing the previous resistance right now. Okay, so this is how you identify the potential zones. Okay, if I was taking the trade, if I was trading USD CAD, okay, if I draw this impulsive wave using Fibonacci ratios, I would consider 61.8 to take a sell. I would have entered the sell order here, but if once I enter the sell order here, it took like 10 to 15 to 16 hours consolidating that market. Okay, so I would have just got away from this trade because I know there's something cooking. I mean, there is a strong bullish reversal, this bullish candle formed there and broke the 61.8, and I know I would have gone long on this zone. Okay, here's the support, and I will continue taking profit of this zone. Okay, this was my target. All right, so if you look at the yesterday market, guys, the market was actually we're waiting for some news. Okay, market trended upward before the news on USD CAD, right? And before 3 to 4 hours of the news, the market reacted and started selling from here. Okay, so as soon as the news came in for the CAD, the news was negative, positive for the CAD. All right, since we are trading USD CAD, I'm just giving news was positive. Okay, news was positive. The market did respect the news and took the price down below this zone. Okay, but as you can see, these buyers, the buyers are gaining. I mean, buyers are stronger than the sellers. Okay, they are breaking consolidation. They're coming and breaking consolidation. Okay, so after 1 hour, after just 1 hour of sell, and the market continue rallying upward. So if you look at this, if you look at the left, so you can understand the market was bullish. I mean, it was under bullish control. Okay, so still we gotta see what are the consolidation, what pattern is gonna make at this zone. If you want to enter a sell or a buy. Okay, so if you had bought this here, you should be getting off the trade from here. If you had bought this from here, it's good. I mean, you have a good pips right now. So before you're heading to new trades, USD CAD, you should look for consolidations. Okay, you should look for the patterns. You should look for the reversal, or if you look for the next move on this pair, right? Before taking any trades. So if you have any questions, so please ask me once again. Anyone have got any questions, guys? I see Pierre is here, my brother. How are you? Hey Pierre, how are you, man? Guys, any questions? If you have questions, just go ahead and type it. Or you can just ask me using your voice. Okay? If you want to show me other more charts, just let me know. On other pairs. No questions? Will we draw Fibonacci for current, previous, impulsive? Fibonacci for current or previous impulse? I didn't understand the question, but I think what you're asking is, if you draw the impulsive wave on the previous chart, on the previous impulsive wave, you can trade the future, you can trade the current, right? That's what you're asking? For an example, okay, so I'm on US dollar versus yen right now. Okay, so this is the previous impulsive wave, right? Okay, this is the previous impulsive wave, right? So this is the current market trending, right? So of course, your past is your present. Your is your future, okay? If you have to look at left to trade the right? So always consider your past impulsive wave is the key to trade the present, right? Okay, if I draw the Fibonacci line here, from the top to the bottom, the long impulsive wave, right? If it's the US dollar versus yen once again, if you look at the market now, okay? So where we don't understand whether market, since it was a downtrend, we know there's a wick, there's a strong buyers here, and the market consolidated and took a support. Okay, let's go and take another Fibonacci ratios on this zone, okay, using this one as an impulsive wave and this zone as a consolidation. Why did the market took off from those zones? Okay, you have to use a Fibonacci on every single impulsive wave, okay? Okay, so I'm considering this one here and this one here as an impulsive wave right now. Okay, I draw the Fibonacci from the top to the bottom. You can see the market broke above this and consolidated about 38.2, but couldn't break the 61.8, and the market took a sell off and came to the support on 23.6, okay, and broke 38.2 and broke 61.8 and consolidated on 61.8 here. Once again, this is a small Fibonacci ratio, and if you look at the bigger picture, you have 38.2. We have two Fibonacci zones, these zones where we consider as a strong zones, right? So it broke above that and consolidated. The market is trending and it's reacting to this zone, but still consolidating below that. So most probably the market is going to take support once again on this zone before it continue upward on the US dollar yen, okay, at the moment. So that's what I'm looking at, because if you look at this zone right now, it's making a small head and shoulder pattern, right? So whenever we have this head and shoulder pattern, that means the buyers are exhausted and there may be a small a sell-off, okay? Because as I'm a retail trader, I don't want to trade. I want to be a buyer here, okay? Whenever you see an impulsive wave, okay, if it's trending upward, you should be a buyer. You should not be a seller, okay? So if I am a good trader, I would wait for the market to come to this zone, okay? I would wait for the market to reach this potential zone, because if I take a trade somewhere here, my stop loss should be somewhere here or below here, and I can take a profit above this zone, okay? Or we can take the profit at 61.8. Okay, if we want to be if I want to get a high risk reward, so you should always get a high risk reward. Okay, so let's take a closer look at this pattern at the moment. Okay, US dollar versus yen. This is the current market. It's a consolidation. Okay, yesterday we had a sell-off. The market is ranging at the moment. Okay, so maybe next week there may be a news for the yen pair, so we need to watch if there are news for the next week. Okay, if I want to draw Fibonacci to this zone here, okay, it's now testing this 38.2, right? Testing 38.2 here once again. See, you can draw the Fibonacci using any impulsive wave. You see these reactions on any time frame. Okay, just do it. Just do a practice on your chart and take an impulsive wave and just draw a chart. It will show you something happening on this particular zone. Okay, it's testing this 38.2, and there's a possibility it will test 61.8 and get a strong sellers and start it falling. Okay, maybe in the SN session it will you know, it will try 61.8 and it will fall. But as a good trader, as a pro trader, we want the price to come to this zone to take a buying trade because the market is bullish, right? So this is the buying zone. Okay, if it doesn't break this zone, okay, that means once we buy this, at least it will just go and test the 61.8 for sure. It will test this zone for sure from this zone, or it will test the 38.2. But if it breaks, we are still long. If it doesn't break, it will show you some reversal. That means we need to get out of the trade and wait for the sell signals. Okay, that's how we should trade, you know, if we want to trade on a daily basis, guys. Any more questions? Any more questions, guys? No questions? Are we good? Shall we end the session? I mean, end this. Someone just said.
Yeah, at least for me, this was really helpful.
Way
Thank
to
you.
enter. Way to enter what? I don't understand. Where to enter? Way to enter what? Can you just give me more info on that? See, I'm sending signals, right? I'm sending signals based on all this. Okay, I don't consider only Fibonacci for trading. Okay, let me just show you my screen, my trading screens, my trading indicators that I use on a daily basis. Yeah, that's what I showed, right? If you take okay, where to enter and where to sell, okay? That's what I showed you, right? On USD CAD, I showed you, right? Okay, here is the example for USD CAD, okay? See, I told you this is the sell-off, okay? This is the impulsive waves, the selling zone, right? It broke 23.6, and that's an indication for me, and broke it strong, okay? It's not acted like, it's not consolidated. It broke strongly. That means I have strong buyers coming in, and consolidated above this, and broke above 38 point. I take a trade here, and I know how to get. I want to get out of on the on the 61.8. This is the where I taking the profit, right? And it broke that 61.2 and consolidated and came in here with the big volume, and I know there's a next target for me is this zone. Okay, so if you buy on the 23.6 or on the 38.2 Fibonacci, once you know the confirmation that it's broke strongly, your next target will be 61.8. Okay, if the 61.8 broken strongly without consolidating below that, that means your 61.8 also is the potential zone. The market will go up. All right. Okay, I mean, way to enter exit tell us the best indicators to get the best. Okay, see, I have AAA tool that I given to many people who joined me on my previous webinars. So those are the paid webinars. Okay, they have everything handy with them. Okay, this is kind of messy, but but since we are just trying to teach you how to draw using Fibonacci using manual. So there are many indicators, okay, in the market. Okay, it will draw everything automatically. Okay, it will draw everything automatically, guys. Okay, but at the moment, I do not want to take more session because few people are asking me like, Manju, I want to learn how to draw Fibonacci ratios. Okay, that's why I took this session, because I was supposed to take this session last week. I had some work, so I couldn't take it. So I thought this is the right time. So I took this. There are many things, guys. There are many indicators in the market. Okay, first we have to understand the manual as a as a beginner. Okay, as a newbie, so you should understand each customized indicators. Those are available on the MetaTrader. Okay, so then once you understand how to use them on a daily basis and how they react in the market, then you use the customized indicators and apply your same techniques and levels on the customized sourced available indicators. So I will be giving you that, guys, all these indicators, because I'm working on some platform right now where you can download some free stuff and you can get a daily analysis and everything. So we are actually working in the background with my team. So we're going to come up with so many things that it will help a lot of new traders, new beginners. So is there any other questions, guys? I mean,
Thank you.
Right. So no more questions. Hope everything. I mean, hope you learned something. Okay. We should, even if you learn one thing that you didn't know, I'm happy for it. Okay. So always make sure that you learn something out of webinars, and feel to ask questions. Thanks a lot. Okay, guys. Okay, so we don't want to continue more because it may be boring for a lot of the other people. So what we're gonna do, guys, please go ahead and post your reviews. Please. I always ask you guys to help me to help you guys. Okay. See, I want to do more. Okay. I know I got some accent issue, but I want to do more. I want to do more webinar for the team. I want to do more stuff for the team. We want to grow as a team. We definitely want to do so. I definitely want to help everyone. Okay, so there are a lot of sources for you guys. Okay, there are a lot of things you can have to follow. But you guys, if you go and go to our Facebook page, guys, our group. Okay, this is our group, the Trading with Manju. Post your reviews here, okay, and post. If you think it's worthy, if you think it's good, the being with them in Trading with Manju, okay. So go and do put some reviews and give some feedbacks and tell your friends. And I also have Facebook page, which I've been running since 4 years of trading. Okay, this is my Facebook page before I coming to Telegram. We have like 10K members here right now. Okay, 10,000 people. Yeah, we are still gaining. These are from Asia. Most of them are from India, Asia, Asian countries. For US is new for me, so we're still trying to cope with US citizens. US members. But if you go and like this page as well, and please put your reviews and comment so that we can grow together, guys. And I'm always there for you. Okay, if you have any questions, please feel to ask me. All right, I'm always available. If I'm not available, we have Sam and Joel. You can go to our Facebook group. Joel is the one who is looking after all the admin stuff. Okay, we have Sam. Okay, so if you can ask any questions, if you need any help. Okay, the most of the time I am working on my charts preparation for the signals. Okay, so I won't be available for other questions. But if you go and talk to Joel or Sam, they will be available for you to help you out. Okay, so we're gonna cover up. We're gonna use. What I'm going to do. I'm gonna do some parameters on a daily basis. Okay, I have for 10 parameters. If I want to take a trade, I should have like 10 parameters, or out of 10 parameters, I should have 9 yes to take buy or sell orders. Okay, so I'm gonna take those parameters to trade on a daily basis. Moving forward from the next week. Okay. So that we get 99% accuracy on the trading. So before I do that, I need your support. So go to Telegram, go to Facebook, go to WhatsApp, go to Facebook page, go ahead and put your reviews and help us to grow, guys. I thank you so much for participating, and We will be doing more webinars in future. I hope you learned something. And once again, thank you guys. I'm ending the meeting. Okay, take care, guys.